The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to keep you up to date on what's happening in the lovely world of high finance. And so every week I'm joined in studio with Tiffany Fabian and Christopher Fabian, and we're going to give you the things that you need to know to make sure that you don't overpay your taxes. And so, hey Tiff, how you doing?
Hey there, Esther. Happy Saturday.
Happy Saturday to you. And Christopher?
Hello, Esther.
Hello, Christopher. I saw your doggie was in the mud today.
Oh, she's been digging in a mud pile, in a mud hole, and so we just covered it up. And
well, the worst part is then the mud comes inside the house once she comes inside. So that's really a problem.
You should have washed her outside.
We have been giving her baths every time she's been digging in the mud.
Anyway, I love doggies, so that's great.
Well, then you don't have one, though.
But I don't have the temperament to have a dog in my house because if they brought dirt in, it would make me crazy. Anyway, want to keep you up to date on what's happening, and today we're our special subject. And you can call us, text us on anything financial or tax related. Our phone number in studio is 8030930. 8030930, star 930 on a cell phone. Our text number is 716-8030930. Okay, so what kind of letters are we getting?
We're getting letters about missing stock sales on your tax return. Also, I got a letter for somebody who missed a $19,000 1099-R on their tax return. So things not matching up to what the IRS
So now
gets.
they're finally running their comparison to what was reported against what they've gotten, and then they send out letters. And when you get those letters, you want to make sure that those letters are accurate before you pay them. And so especially on stock sales, they don't know the cost basis, so their letters regarding sale of stock is usually wrong.
Oh, yeah, I've seen like 5 this week where your phone calls from people. Oh, my God, I owe $20,000 to the IRS. I don't have this kind of money. What? Just bring in the letter, and sure enough, it's the stock that they held for a while, and now we got to give them the basis, and they may owe $500. They may actually have $500 coming back because it was a loss.
They sold it at a loss, right?
Yeah.
So if you're getting letters, EG Tax will help you. Just give us a call. We will sort it out. It's a lot like getting something in Sanskrit. You don't really know what it's saying. We understand. And so we wanted to talk about, since we're talking about sale of stock, our subject of the day, and again, you don't have to follow our subject, but it's capital gains. A lot of people don't understand capital gains, and so we want to make you smarter than the average bear, so to speak. Wanted to mention, though, that as of Thursday, Nancy Pelosi, who wants a relief package of $2.2 trillion, the Republicans are looking at a deal at $1.8 trillion. And they're saying that as of Thursday, they're very close to a deal. And if that's the case, they're going to be sending out second stimulus checks, and almost everybody's going to get $1,200 for the second stimulus. And of course, at EG Tax, as soon as we know something, we let all the news media know so that everybody will know what to do for in the event that they have the stimulus money coming out again. So that's to keep your fingers crossed. If you're in dire straits, and there are a lot of people that are hoping this thing passes, they need the help.
That's right.
I mean, you losing your job to Corona is no piece of cake. Right?
No. The emotional. I was doing a client's tax return, and he said that he knows somebody who he lost to COVID, and that was his brother, and regrettably he took his life because he didn't have income and didn't have a job, and he was in the entertainment industry, and it just shattered your heart.
So COVID didn't get him; depression got him.
Mm-hmm.
Right? Yeah, it's one thing that I saw President Trump, and I was really proud of him the other day, that he said that I thought was true is this is an unwanted guest that we have to learn how to live with to minimize our exposure and be smart to try not to get sick. But life has to go on because we can't just close up our economy forever until this thing goes away.
Right.
So,
Right.
But anyway, wanted to talk about stock. And again, 8030930, 8030930, star 930 on your cell phone. A lot of times people say, oh, no, is this capital gains? No. Chris and Tiff, if you have a capital gain item, is that bad or is it not?
No, that's capital gains is better than regular.
That's right. I mean, when you have a capital gain item, that's not a bad thing. Capital gains are taxed. On the lower end, you aren't taxed at all at 0%. On the upper end, the maximum is 20%. So, and if you might be on the 38% bracket, but if you have capital assets, you're taxed at 20%. So it's a good thing if you have a capital asset, as opposed to a non-capital asset, which might be pensions or wages, for instance, or interest income. But if you have qualified dividends from stock or stock transactions that you sold at either a gain or a loss, there are special ways to treat it, and their capital gains is a deal, not a bad thing. And I wanted to make sure that people understood that. So I thought we would talk about that. Capital assets are stocks, bonds, mutual funds, land, real estate, houses, stamps, coins held for an investment, art. Those are some of the things that are capital assets. When you sell a capital asset, you end up with a gain or a loss. If it's a personal capital asset, like a pen or a watch, and you sold it at a loss, the loss is not deductible. If you sell a personal capital asset at a gain, it is taxable, but at a very favored rate.
Right. Yep, which is really good. It's, if you're in the 15% tax bracket, that capital gain goes all the way down to 0%.
Right. So if you sell it, it's at 0%. So a lot of times when people are looking at their brokerage statements and they didn't tell their broker to sell stock, they didn't realize that a transfer or a rebalancing of your portfolio might have resulted in many stock transactions. You have to go back and find out what you paid for that stock, what you sold it for. The difference is your gain or loss.
Right. And did you inherit it? Was it an inheritance? Was it a gift? Was it, there's many different ways to acquire, and you have to know the right answers to get the best tax answer.
That's exactly right. So, for instance, if you, let's say, for instance, that you sold a capital asset at a loss. Let's say you had stock and you paid $10,000 for it. You sold it for $9,000, and the IRS has sent you a letter because you didn't put it on your tax return. They're going to think that you left off $10,000 in income.
Correct.
But you paid $9,000.
$9,000. Yeah.
But you pay $10,000 for the stock. You end up with $1,000 capital loss, which, if you have nothing else to offset it against, would end up with $1,000 against your other income, and which would be fully deductible up to $3,000. So that'll save you money. So you didn't put it on your tax return. They got the letter telling them that you were issued $9,000 in sales, but once you really do the Schedule D, you find out that you end up with a deductible loss of $1,000.
Yep. You want to grab one of these calls before the break?
I do. Well, no, I'm going to wait. I know we have calls waiting, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back in a minute with your calls. Hey, to us, your family. This is the head of the family, Esther Gulius, the tax lady, joined in studio with Chris Fabian, Tiffany Fabian, and we are talking taxes today, specifically capital gains. But whatever you want to talk about tax related, we'd love to hear from you. 8030930, 8030930, star 930 on cell phone. Text us at 716-8030930, and we're going to go to Mike in Buffalo. Hey, Mike, how can we help you, sir?
Oh, hi, Esther. Actually, I got a check from the U.S. Treasury of over $5,000, and it basically said it was my refund for, 2019. But the trouble is, I actually, I did my taxes fairly early and got a refund from the government of $3,200, which is what actually I was supposed to get, and it was direct deposited into my account. So now I got this $5,000 check, and I really don't know what to do with it.
Okay, so what I'd suggest is you don't want to guess. If you want to call Tiffany, because Tiffany's like our third-party IRS person, you can call her. She will connect you with the IRS, and then you say, hey, how come I got this extra $5,000? It could be a mistake, and they'll ask you to send it back. But I would suggest you give her a call. There's no charge, 632-7886. Chris, you got something?
I was just going to say, do you make estimated payments there, Mike?
Yes, I do.
I wonder if they applied an estimated payment wrong, or if you didn't record all the estimated payments. It could be something just as simple as that.
Right.
But like Esther said, definitely give Tiff a call.
Because you don't want to send it back without checking with them to find out if they had misapplied an estimate. It's simple. They will do all of the reallocation over the phone. So give Tiffany a call, and she'll do a third party, or you can come in the office. We'll do it that way too, okay?
But I don't understand, since they already gave me the refund. Shouldn't the records show that? I don't understand.
Well, see, if they had misapplied, let's say you made your first estimate in the first quarter, which let's say it was $5,000, and they put it towards the previous year. They processed your return probably electronically first, gave you that refund, and then as they came out of the smoke from COVID, they see, oh, gee, he really should have not asked for $3,500. He should have asked for $8,500, which really isn't correct if somebody had misapplied that estimate. And so the only way you're going to see what they have on their records is to make that call.
And then they will adjust it.
Then they'll adjust everything.
Or you'll have to mail the check back.
Right.
All right, I see.
I mean, you're dealing with a humongously large agency, and if somebody keyed it in incorrectly, what'll happen is if you don't take care of it properly, the error is going to go into the filing of your 2020 return, and then it'll be a big problem. I'd take care of it now if I were you.
All right, actually, all right, then I'll do that. All right,
Yeah,
well,
give us a call, Mike. We're happy to help.
all right, thank you.
All right, thank you, sir.
I know this week one of my clients got a letter. We did an amended return in end of March for 2019. They mailed in the check in April. IRS opened the check in middle of May. No, they didn't. They opened the envelope in the middle of May, which included the amended return and the check. They cashed the check at the end of July, and the amended return is still not in their system.
All right, they haven't processed it
And we
yet.
called the IRS, and we're like, what's going on? And they go, we don't know. I said, well, you open the envelope. Where's the amended return? We don't know. Give us another 3 months. And we're like, as they have a bill out there for $2,000. We're like, no. So I turned around and I sent the amended return electronically.
Yeah.
I mean, it's just insane.
Sometimes you really need to be proactive, because they really have become, they're behind the eight ball. They're human beings too. Right?
Yep.
We don't think of the IRS as human beings, but they are human beings. And so they were struggling with the COVID thing as well.
Yeah, and like you said, with being applied wrong, they also got a letter saying, oh, we misapplied a $75,000 payment on your account, and we're backing it off now. They don't even make $75,000. So somebody in the IRS, fat fingers, hit the wrong button or something, and so they do make mistakes. So we just got to call them and see what's going on.
And that's why that personal touch, that the upfront being proactive really is the best thing you can do, because to wait till next tax season is not a good idea.
No.
All right, let's go to Pat. Hey, Pat, how can we help you?
Well, I received a love letter from the IRS.
What does yours say? Dear Pat, we love you.
We're sorry, 2020 is such a tough year.
What does it say, Pat?
Yeah, I'm confused. It says proposing changes to your 2018 1040. This is not a bill. Okay, proposed amount due $1542. So I'm reading through this, and they're claiming that Vanguard or we didn't report. I don't do
You
my...
didn't report. You had stocks. sales or adjustments or rebalancing, and you didn't report it, and when you report it with your cost basis against what you sold it for, you're going to have a gain or a loss. It may be a loss, but whatever the gain is going to be far less than what they have, because only the total amount of sales are reported on their end. So give us a call. We will be very happy to help you with that.
Okay, because I'm assuming this is probably for my required minimum distribution.
Is it a 1099-R? Does it say, is your Vanguard your pension plan?
Yeah, well, it says 1099 account
Does
information.
it say 1099-R?
Or 1099B?
1099-R.
R. All right. So when you did your tax return, you probably did not put on your RMD, but again, until we look at it, we won't know.
Yeah.
And then don't forget, when you get one of those letters, you have to also tend to the state too, because there's
Right.
freedom of information. And so the IRS will let New York State know. And if you're over the age of 59 and a half, you get to exclude up to $20,000 a year off state. So, but you got to let New York State know.
So, but the important thing is to get it taken care of. Let's take a look at it, and if they made an error, we'll let you know. If they didn't, and you owe the extra money, we'll take care of the state for you, so that you don't. The first, like Tiffany said, the first $20,000 in New York State for you is tax free if you're over the age of 59 and a half.
Right. Well, I'm not a New York State resident, and that's where the rub is. My tax return is in Florida. I'm on my way back November 1st.
Okay. So then you didn't. That saves you a lot of money.
Well, the state does, yes.
But yeah, give us a jingle, and we'll be very. So you're moving back to New York?
No, she's going to Florida.
Yeah, no, I'm going back.
Are you a snowbird?
Yeah, yes, and I just sold my house, so it's permanent.
Sounds like she's a permanent resident.
So you're going down there permanently. What part of Florida?
Melbourne Beach.
Oh, well, enjoy the nice warm weather.
And the
because
freedom.
I think as of today, the weather turned.
Right. Oh, thank you.
And again, just call us, because you can, it's not long distance, so, you can talk to Tiffany, and we'll make sure we get that call.
Or you can go to wherever did your 18 return,
Right.
It was the AARP, and I don't know what they are until they
Yeah, we don't even know if they're going to open. Yeah, give us a call when you're down in Florida and you have your return.
Fax us over the letter.
Okay, thank you so much.
All right.
Already.
And then we got Larry from Kenmore. Hey, Larry, how can we help you?
Hi. My question is regarding the capital gains on stock that's in a 401k. When it's time for the RMD, does the cost basis have anything to do, any effect on the next day?
On any kind of pension plan, any capital assets that are in your pension plan really have nothing to do with how they're taxed. If it's a traditional 401k or IRA. So whatever you put into the plan, if you put in $10,000 and when you cash it out, you have $15,000, the whole $15,000 is taxable because you didn't pay taxes on the $10,000 because it excluded taxable income or was a subtraction. So the entire growth, no matter how you got it, through stocks, through an insurance company or some other investment, it's going to still be fully taxable.
Okay, and one more thing, if I may. My birthday's in November.
Mine too.
Oh, we're almost related.
What day in November?
18.
Oh, well,
close.
I'm 25th. November 25th.
Well, I'm a few years older, a few days older than you are.
That's right. My elder.
Regarding that,
that's right.
I turned when I turned 72. How late will I have in the following year to begin my first withdrawal on my RMD?
All right. Well, in 2020, you don't need an RMD at all.
Right.
And so in 2020, you're turning 72?
In 2021.
Okay. So you start withdrawing then in 2020.
Well, when did you turn 70 and a half?
Actually, I'll be 71 this November.
So you turned, okay, so yeah, okay. I just want to make sure it's still 72 for you, because if you would have turned 70 and a half in 18. Yeah. So anytime before the end of the year of 2021.
Very good, folks.
Based upon the fair market value of your account as of December 31st, 2020.
Got it. Okay.
Okay?
Good.
Okay, good. Hey, thanks for calling.
And going back.
Happy birthday, Larry.
Yeah, happy birthday. Going back to Pat, I know I've seen a couple letters where people, like, they may have put down $5,225 and the IRS is looking for $5,228.
Yep, that's
and they
right.
think you didn't
And they
report
send
it.
a letter.
And
Yep.
so you're only off $3, not the $5,000.
Right,
So
right.
it could be something
and
like
that's the whole thing is you want to, don't just pay it, let somebody else look at it. Many times it's a difference between when the doctor says, oh, you have cancer, and we find out you only have a cold. So it's really important to have somebody else look at it.
Yeah, and
there's
it's
no charge. This is a service we offer.
right. And it's not a person who's doing this. This is just computers.
Computers.
So we know computers are all programmed to look. You have to look for X. If you don't see X, you send a letter. So that could be something just, like I said, off $2, off $1, off $5. So hopefully it's not as bad as it is for you.
I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone, and our text number is 716-803-0930. We're talking about capital gains, all the different ways that it's taxed to make sure that you're the smartest guy in the room. If you're getting love letters, and they are starting to send them out, you can give us a call. We'll try to decipher what those letters mean. And we're going to take a short break and be back with your calls on the other side of the news.
We are family. I got all my sisters with me.
Hey, we are family. We want you to think about if you end up with a tax problem or question, EG Tax is there to help you. We're there, obviously, during tax season, 9 to 9, Monday through Friday, 9 to 5 on Saturday. This time of year, we're there 9 to 5, Monday through Friday. Our tax school's underway, and we're here to help you. So if you're getting love letters and you go, oh, my God, I don't understand what it says, we do. We do, and we don't charge you to interpret. So I just saw that Mr. Bojangles. Remember that song, Mr. Bojangles? Remember him?
Yes.
You don't remember that song?
I do.
You liars.
No, I remember.
Yeah.
I'm just not
The
singing.
guy that
I don't
wrote
want to
it, he
torture
died.
people.
Okay.
Oh, he
died.
passed.
See, I was just looking at that on computer. All right, let's. I wanted to talk about. We're talking about capital gains, and we have your calls. 803-0930, 803-0930, star 930 on your cell phone. If you sell rental property, that is potentially a capital gain. And again, capital gains are taxed at a lower rate. The accelerated depreciation is captured as ordinary income. But if you have rental property, you can do a 1031 exchange and completely exchange out of it, right?
That's right. Yep. The money can't touch your hand. You have to have an exchange person help you.
Exchanger.
Yep. Exchanger. He has to navigate the exchange, and you have to exchange it and put the money onto
To another piece of investment property.
That's right.
So that means that if you had a storefront here in Western New York and you're going down to Miami, you can instead of paying the taxes on it, let's say you're going to sell it for $500,000 and you might have to pay $100,000 in taxes, you can exchange that for maybe a rental property in Miami.
Right.
And you wouldn't pay any taxes at all. So that's another form of capital asset. Sale of capital asset.
And there's great-
different ways they're all handled. Yeah.
There's great conversation that the Democrats would like to remove the 1031 from the tax code. So that tells you that it's a tool that we have now.
If the wrong person gets elected, exchange. Okay, let's go back to line one. Mike has waited and waited. Hi, Mike. Thank you for waiting. We appreciate your patience.
Hi, Esther.
Hey.
Kind of a weird situation. My wife does these surveys online, and for that she's received gift cards. Now, apparently, and I don't know if it was legit or not, that's why I'm asking you. Apparently, she got a notice that said after $500 of these, she has to give information to the IRS, and they were asking for Social Security number, whatever. She didn't send anything in because she was a little suspicious. But my question is something like that legit?
All income that you receive for performing a service is taxable unless it's specifically exempt. when she's performing a service for doing those what are
Surveys.
surveys, that is going to be taxable income. So whether you get money or a gift card, it is going to be taxable. And they are correct. They have to issue her a 1099 over $600. So if she wants to keep doing surveys, she has to provide that. By the way, all of her income up to the $600 is also taxable.
Yep, it's just that they're required to fill that paperwork out after that amount, but it's all taxable.
Right, absolutely.
Hey, and one other point on that. With that money, since she's paying for that, would that be considered earned income so that she could use that toward her
It is earned income. It's earned income, and she gets to use that on a Schedule C. She would put down all the money that she got in gift cards or how much money she received doing her surveys and the expenses to perform that service. So if she had to do any legwork, go to talk to people, all the mileage would be deductible. So, yes, that is earned income.
And then she could use that for an IRA also?
Yes, correct.
Oh, wonderful. Good. Super. Thank you again.
All right. Thanks for calling, Mike. All right, should we go to the text before we go to
Yep,
Maria?
the text says, "Hi, I sold my mom's house. She passed in December of 19th of this year. My name was on it, but not officially. Still confused. Do I have to pay tax on the sale of the house?"
Well, I'm confused because I don't know how your name could be on it if it wasn't officially.
I'm thinking
How do you get your name on something not officially?
I'm thinking this texter's possibly got a life estate, got it through a life estate.
Okay.
Because your name's on it, but your name's not on it.
If your name was on the title as the owner, not on a life estate, but as the owner, then your mother would have given you a gift prior to her death, which would mean that you'd have to go back to her original basis, and if mom had inherited her half from dad, you would get a stepped up basis for that. If there was a life estate, then basically you start working out working in your percentage of ownership, and she would get a stepped up basis based upon the fair market value of the asset, the house, after mom's death. So I think we should have a conversation because you certainly don't want to
do the wrong thing.
And you know, it's worth a phone call. There's no charge. We'll be very happy to help you. So call us at 632-7886 on Monday, Tuesday, Wednesday, Thursday, or Friday, and we'll be happy to figure out what really happened.
But if it was a life estate, they would get the stepped up basis.
That's
and
right.
they would be very happy.
They'd be happy.
Yes.
Okay, so for those of you that want to give away your house and just put your kid's name on it, talk to us first. All right, let's go back to line 2. We'll go to Maria. Hi, Maria. How can we help you?
Hi, Esther. Hi, everyone. Back in March when everything got closed down, I panicked. I took $9,000 out of my IRA.
Uh-huh.
I have since put it fully back, the full $9,000. They said they're treating it as a rollover, $54.98. My question is, when I had the money withdrawn, I also had them withhold 10% in taxes.
Sure.
Will I be getting that back when I file my tax return?
So let's just say that you took out $10,000 and you rolled back $10,000.
Mm-hmm.
And there was $1,000 in taxes that were sent to the IRS. You will get the extra if you took out 10 within 60 days, rolled $10,000 back. The $1,000 in taxes that were sent to the IRS, that will be listed as a payment under the payments section of your tax return. And if in a perfect world, you get an extra $1,000 back when you file your return.
Okay, so I will get that money back.
You will get that money back.
I
yes.
didn't put it back within 60 days.
You didn't?
No, I put it back under the CARES Act provision.
Yay.
To three years. And they told me they coded...
Well, that had to be a 401k.
Yeah, was it a 401k?
It was originally a 401k 100 years ago, and then it was transferred into a traditional IRA when I left.
Had to be. It was. Now, I will tell you, they wrote a lot of changes in the tax law with this CARES Act. But everything I read said it had to be a 401k.
Okay.
So if you took money out of an IRA, that did not seem to be what I read, but I will
It's not
be
what
very
I read
happy
either.
to do the research for you. If you call Tiffany or Chris on Monday, by Monday we'll know.
Okay.
Okay?
I definitely will. What number do I call them at?
632
Mm-hmm.
7886. That's our corporate headquarters.
Okay. And real quickly, I know you have other callers. I am a recipient of a class action lawsuit. How am I going to know if I have to pay taxes on the money I get?
Was it for pain and suffering?
No, it was not. It was an employee type of class action suit.
Okay, was it for lost wages? They didn't pay you enough?
A little bit of everything, yes.
Okay, well, unless it's a personal injury lawsuit or some discrimination, it would be fully taxable. So again, find out the terminology, and while you're making the phone call on Monday, find out exactly what kind of settlement you got.
Because if it's
it sounds like it's going to be taxable.
If it's pain and suffering, it's not taxable. One of my clients, she got money for being a whistleblower. That was fully taxable. So, as Esther says, it depends.
So let's take a look at how they're classifying this. But I would assume off the top of my head it's going to be taxable.
Yep. And just so you know, I was just on my phone. I was paying attention, but I was also Googling. It does include IRAs.
Oh, it does include. All right, so you don't have to call us on that then. So your IRA is going to be good if you put the money back within the 3 years.
Yes, I put 100% of it back. So
all right, you're good, and so you're going to get your extra money back.
Your withholdings.
With your refund.
Okay, awesome.
Okay.
Thank you. I love your show. I absolutely love it. Thank you.
Well, thank you so much. We really appreciate that. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. And we're talking about how all the different capital gains are taxed. So we just talked about rental property, personal residence. This is you can have $500,000 every 2 years tax-free on the sale of your personal residence that you've used 2 out of the last 5 years, because sale of personal residences are tax-free as long as they were never turned back into rental property. So that's wonderful. So here is your capital asset, your personal residence, which you've been using personally for the last 2 out of 5 years. You sell it, married filing a joint return, up to $500,000 tax-free. On the if you were single, up to $250,000 tax-free. So you could buy a house, live in it for 2 years, sell it, buy another tax-free, buy another house, live in it for 2 years, sell it tax-free. And so that's a remarkable loophole in the law.
Right, and you don't have to buy a new house.
That's true.
I mean, you could sell it like the earlier caller. She could have sold her house up here and just lived in an apartment down in Florida and not paying to the tax on the gain.
Right.
So
now, if you have depreciable assets like machinery or equipment, let's say you have a company and you buy cars for your employees, then when you sell, even though a car is a capital asset, as soon as it's depreciable, it's no longer a capital asset, and it's a 4797 asset. And so when you recapture the depreciation, when you sell the car or the tractor or the truck used in business that had depreciation, it would be recaptured as ordinary income, just like wages. So we've learned that some capital assets are only taxed at 0%, some capital assets maximum 20%, but if you sell depreciable machinery or equipment, that's recaptured as ordinary income. So if you had a $100,000 truck that you used in business, which you wrote off for business, and you sell it for $50,000, you would say, gee, the guy lost $50,000. Not really, because he got a $100,000 write-off. He's going to end up having to pay tax on, because at a zero basis, on $50,000 as ordinary income, just as wages.
And
so it's all very interesting.
Right, and confusing, because I'm going to confuse people now a little, sorry. Going back to what Tiff said, with the elections and they want to get rid of 1031 exchanges, there was already a change with exchanges
Yep.
a couple years ago, where you used to be able, like you were saying, if you had a car for a business and you sold it, now you have to pay tax. Before, you could trade in your car and get an adjusted basis and not pay tax on it. They changed that. So if you have vehicles in your business and you're selling them now, you better make sure that sale is listed on your tax return.
Yep, I was thinking the same thing. This is a new change in the
Okay,
code.
we're going to take a short break. We're going to be back on the other side with your calls. 803-0930. 803-0930, star 930 on a cell phone. Text us at 716-803-0930. I'm Esther Gullius, the tax lady. See you in a minute.
We are family. I got all my sisters with me.
Hey, to us, your family. I'm Esther Gullius, the tax lady, here helping you with your taxes so that you're the smartest guy at the social functions that you're wearing a mask at. Our phone number in the studio is 803-0930, 803-0930, star 930 on a cell phone. Text us at 716-803-0930. I wanted to talk about, we're talking about capital assets. If you invest in stock, in an empowerment zone. Now, there's all kinds of empowerment zones across the United States, but to encourage companies to go into some of the more blighted areas of our cities, that if you're an investor in a small business stock in an empowerment zone and you hold it for at least 5 years, the gain is completely tax-free. So for those of you
Cool.
looking for some tax shelters, invest in an empowerment zone, and when you sell the stock after 5 years, it's completely tax-free. The same thing in 1244 stock, which is small business stock, again, not in an empowerment zone. If you lose money, whereas in a capital gain, it would normally maximum loss that you'd be able to take is $3,000. If you lose money in small business stock, 1244 stock, you could take a loss up to $100,000 in the year of loss. So those are things to help you say, you know, Mildred, I think we had small business stock. Did we ever do that right? Call us because we can help you fix it, right?
Right.
All right, let's go back to the phones. We're going to talk to Kay. Hi, Kay. How can we help you?
Hi, thanks. Good show. I've sold $7,000 on eBay, and the people that are buying from me are all over the United States, and they have to pay tax. Where does that tax money go that they're paying?
Well, it would be the sales taxes that
Goes
would go
to the different states.
To each state,
So-
based upon whatever state they live in.
Okay, so that's not going to New York then?
No, only
Good
only
question.
sales that are New York sales would go to New York.
Okay, so if I sold $7,000 worth of stuff at the end of the year, I'm going to have to claim that?
Yes.
Oh, yes, of course you are.
Yeah.
So, okay, so let's clarify this. When you're doing things like eBay or some other online sale,
Let
let's
go.
say that you are selling, you say, oh man, I hate that dress. I bought that dress for $40. It looks like baloney on me. I think I'm going to sell it on eBay. And you sell it for $20. That's a personal capital loss, really, if you think about it. So if you're selling things that were in your house at a loss, your cost basis is going to be higher than what you sold it for. And since you're selling personal assets, it wouldn't be deductible, but it wouldn't be taxable either. So what's really important is that you keep fastidious records as to what you sold and where. But now, by the same token, I have clients that go out on garbage day, and this is the truth, and they go pick up other people's garbage, and the gentleman goes in his barn and fixes them all up and sells them on eBay. He's got a zero cost basis because he picked it up, and maybe he's got some stuff he put into it, spray painted it or whatever. He has like $125,000 a year in sales. That's all going to be,
So-
a lot of it's going to be taxable because it wasn't his stuff that he's selling at a loss. He's actually out, except for the travel that he has. He actually is out making money as a business.
So Esther's saying, don't forget when you got to put $7,000 that item originally probably cost you something. So you the difference.
And so the difference between what you sold it for and what you paid for it is going to reduce the gain.
Unless you were picking it up from neighbors and things like that.
And how does New York, how would they see all this? You know,
Okay,
I'll-
well,
The
if
IRS.
you're talking about sales taxes, if it was sold outside of New York State, you don't have to worry about. If you're using eBay, they're already collecting the sales taxes out of your sales, and they send it to New York State for you.
Right. What Esther was talking about before is the income tax you
Income.
have to.
Right. There's income taxes and sales taxes. So there's federal income taxes, state income taxes, and state sales taxes. eBay collects the sales taxes and sends it into New York State for you. And when you get your 1099 at the end of the year, they're going to list how much they sent in taxes out for you and what your gross sales were.
Oh, so I'll get something at the end of the year.
You will.
Oh, okay. Thank you.
You're very welcome. Thanks for calling. Okay, let's go back to Jeff. Hey, Jeff, how can we help you,
Oh,
sir?
he's gone. Don't know what
is
just
gone.
happened to
Yeah,
him.
and there's a text who says, there's actually two texts. The one text says, though, can you help filing our renewal application for the partial tax exemption for real property of senior citizens? Can I do it over the phone? Mom's a client.
Well, if there are,
Well, they go to the city for that, don't they?
yeah, if there are certain forms that they need, we can help you with that. You would have to send fax us or email us the forms to help you fill them out. Unfortunately, we can't do anything out over the phone because of privacy laws.
For mom.
For mom. But yeah, a lot of times now the renewals are automatically done through the tax returns because it's all state oriented, not the local cities. So just check with your city first to see if they need the form or just the tax
Yeah, 'cause
return
you
that
might
was filed.
you might be surprised to know they've already done it for you.
Right.
So
right.
always check with your town treasurer and find out, we want to make sure that we get our property tax exemption. Are we covered? And if you aren't, then give us a jingle because we're always happy to help you. Okay? What's
Yep.
our next one?
Looks like we struck a nerve with the eBay.
I got it right here. Oh, you say it, Chris. Go
Okay.
ahead. I just was
Okay.
checking.
Somebody said eBay gets the tax. Why does eBay pay the tax to the buyer? Then
we
it's
don't pay it
what
to the
record.
buyer, right.
My sales are down because eBay charges tax. It pissed off buyers of my junk. What a scam. I'm never claiming anything.
So it started off, it says, no, eBay gets the tax. What does eBay pay to the government? Question mark, question mark, question mark. Like Amazon does not pay any tax at the end of the year.
They pay the
Okay, so
sales
this-
tax for you.
So every state really wants, if there were sales of product in their state, they really want the sales taxes. So does New York State. And so they go to these big companies, eBay included, and they say to eBay, if you have somebody sending something to Illinois, we want you to collect the Illinois sales tax on that item and send it to us. And so eBay, to help the person doing the sales to facilitate the sales taxes, collects and sends that, which is a wonderful blessing. Now, if you think about it, in New York, in Erie County, it's 8.75%. But in many other areas, it's like 4% and 5%. So on a $100 item, it's $5. If $5 is stopping a sale, I'm surprised.
Yeah. And I can tell you, you would want.
They're doing you a favor. Believe
Yeah,
me.
you would want eBay or PayPal or Amazon to do it because I used to work for a company and I used to have to do 24 different state sales tax returns. You got to be up to date on all the laws, and each one of those states can come back after you. So let somebody else take care of it.
That's right. To have it done for you is a blessing.
And before the
Because
show's over,
otherwise-
do you want to do
Otherwise,
the...
they'd come after you, and that's not a happy thing. They'd make you do it. Let's go back to the phones. We'll talk to Kathleen.
Hey, Kath.
Hey, Kath, how can we help you?
Yes, I have a question about our income tax return.
Sure.
We had it done this year professionally, and come to find out that they did not include the taxes I paid out of my state pension, which was like $1,116.
Okay, so you can amend that return, put that on, and the state of New York, after some time, will get you your money back.
Well, no, that's not the problem. We did the amendment because another company called me and they said they knew that the first company made a mistake, and they said, we'll do an amendment. So he did an amendment for us, and sending in my 1099 to prove that, I had paid those taxes. Plus, we owed them $1,500. I sent a check in with the 1099 and the $1,500 we still owed, and they cashed my check. The IRS did cash my check, but in September, I sent that in June. In September, we got a letter from the IRS saying that we still owed the $1,116. Plus, they added on penalties and.
Okay, so not to worry, because the IRS was off because of COVID, and they were initially sending out letters because they were doing these letters based upon everything they knew at the time, and they were way far behind in processing. What I'd suggest you do is, if you want to call Tiff, she'll do a three-way and make sure that the federal government has now opened up and processed your amended return. And our phone number is 632-7886, and there's no charge for the service.
Okay, I'm sorry, 632, what was it?
7886.
7886. And who should I speak with?
Tiffany.
Like the jewelry store?
Oh.
Yes, Tiffany the Diamond.
Nice. All right, I love.
All right, yeah, we'll be very happy to help you.
It says, Esther, what records should be saved for traditional IRAs and Roth IRAs?
Well, I mean, in a traditional IRA, you want to keep it, if it's a traditional IRA, everything you put in has already been deducted. So unless you had non-deductible IRAs, which would mean you'd have to keep track of your basis. So I don't have time in a minute to explain it, but what I'd suggest you do is call us at 632-7886, and we will go over all of the things on a Roth IRA. Everything's going to be taxable when you take it out. So it all depends on whether you had any non-deductible contributions to your traditional IRA. Okay, I'm Esther Gilius, the tax lady. If you're getting love letters, and they just are, like we were saying to that nice lady, they're just now getting everything all squared away. So if you're getting love letters, bring them in, call, email them, fax. We will help you with everything. Our phone number during the week at our corporate headquarters is 632-7886. Our email address is our website is egtax.com, and we're there to help you. There's a little part in there, Ask the Tax Lady. You can click on there, ask me anything you want. Until next week, I'm Esther Gilius, the tax lady, with Chris Fabian, Tiffany Fabian. God bless you. Have a great week.